Since October 2022, the markets started going up. Everything went up. It looked like something different had happened. People were confused. People were bearish. The bear market was supposed to go down another 20, 30%. And yet, in October, everything turned up. This bothered me for what we are in March. For the last 5 months, I couldn't see why. Not only that, but there were a lot of indications that something different it was taking place. Exactly what? Finally, I think I found the answer. And if you followed my videos, I don't think it will surprise you. Okay, let's go on. This is the graph of the business cycle indicators that we developed. And when it goes down, the economy is weakening. When it goes up, it's strengthening. And when it goes down, it's weakening again. Now, what is interesting about this curve is that during this period, defensive stocks outperform. During this period, aggressive high beta stocks outperform. During this period, since 2021, defensive stocks outperformed. Now, what bothered me, that beginning in October 2021, this indicator was telling me, contrary to what I believe and everybody was saying, was telling me that the economy, the business cycle, started again. There was a new business cycle going on. And something else happened as well. The stock market, the S&P 500, declined since September 21, exactly as our business cycle indicator would suggest. And then beginning in October, the market's strengthening again. So this is another piece of information that says, wait a minute, something is going on. What? And what is very, very interesting, and again, proving that something seriously bullish was taking place, is not only from a stock market viewpoint, but from a business cycle viewpoint, that the stocks that are supposed to be strong during an upswing in our business cycle indicator were actually stronger than the market. This is the S&P 500. And what you see, the cyclical stocks being stronger than the market, and the defensive stocks here, this way, are weaker than the market. So now the evidence is pointing to a business cycle and a market cycle that is going underway, a new one. Commodities are the most sensitive to changes in economic strength. So what you see here is a crude oil that is coming down, but then beginning last fall stopped declining. You see here, this is copper, weakening because the economy was weakening, the business cycle was coming down, but now it's strengthening, which is exactly what you see when a new business cycle is underway. This is DBA. DBA is the agricultural sector. Even that, the agricultural materials, agriculturals, they were weak, but then they stopped declining. And of course, finally, the 2-year Treasury with declining because the economy was weakening and now is going up again. So beginning in October 22, all the elements of a new business cycle was underway. And this is very strange given that credit conditions are tight, the inverted yield curve, and money supply contracting. This is not when you see the beginning of a business cycle. Then what did it overwrite all the financial conditions? And by the way, financial conditions that in fact the Chicago Federal Reserve said that they were easing credit conditions since last fall. And this is the answer. I showed you this in previous slides. When the government spends more money, the money supply grows and business, stock market follows after several months. When the spending of the government slows down, then the money supply declines and the stock market and everything else goes down, the business cycle. But look what happened since last summer. The government spending slowly and steadily started to increase. And this is the answer. Government spending since last fall has been rising, and this has created the liquidity that eased credit conditions as reported by the Chicago Fed. It's not the Fed, it's not the banking system, it's just the government that keeps on printing money. And what is the outcome of this printing money? Again, short-term interest rates responded immediately by going up. In fact, in a different video, I will show how inflation stopped declining that we used to do in June, July, and August. By September, October, it showed a little uptick in inflation. Commodities started going up. The stock market started going up. And what is the culprit? Is government spending. So as long as government spending goes up, the trends that I have examined will remain in place. And this is very, very dangerous given the tight credit conditions, the decline in the weakness in the housing market. Is just incredible what Washington is doing. So really, on one side, the Fed is trying to fight to get the inflation down, which I don't think is as successful. And on the other side, the government overrides what the Fed is doing by giving more and more money, spending more and more money. And the government is winning, not the Fed. This is what this presentation is all about, unfortunately. As you know, I publish the Peter DAG Portfolio Strategy and Managing. It's published every week. You can have a free subscription, no credit card required, by the way. And by going to www.peterdag.com. McGraw-Hill Education paid me to write this book, and I had some great feedbacks. It's available in Asia also in several languages. I wrote 2 more books. Easy Ways to Beat the Market with ETF is based in a study on really moving averages. This is investing wisely. It's easier than you think. It shows an approach to investing, selecting stocks. And on Twitter, you can follow me on Twitter. I update these charts quite often, almost every day, if not more than once during the day.